how to hire your spouse and save taxes. If you don't know me, I'm Craig Cody. I specialize in accounting and tax strategies, helping business owners legally reduce their taxes and keep more of what they earn. And today, we're talking about one of the most powerful but misunderstood strategies, hiring your spouse for tax benefits. If you own a business and you're married, this strategy could save you thousands in taxes every year. But here's the problem. Most people do it wrong. They get little to no benefit, so let me show you how to do it correctly. The number one mistake people make is when people search how to pay your spouse in your business, they usually think, I'll just put them on payroll. That's the mistake, because wages are fully taxable, subject to Social Security and Medicare, and don't actually reduce your overall tax burden. You're just moving income around from one person to the other. The real tax strategy is this: pay your spouse using tax-free benefits instead of wages. Why does this work? The business gets the full deduction, and your spouse receives tax-free income. That's how you create a real tax savings as a business owner. If you've heard of Section 105, this is where it comes in. This is one of the best tax strategies for small business owners, assuming you're a single member LLC. What you do is you can deduct your family's health insurance, you can write off medical expenses like co-pays and prescriptions, you could turn what may be personal expenses into business deductions, assuming they meet the criteria. You can make these 100% business deductible, tax-free to your business, no caps, just need to be reasonable and documented. We do this often with clients when they're going through massive dental reconstruction and such as implants and stuff like that. The strategy isn't limited to health insurance. You could use it for business-related education, smartphone, life insurance up to $50,000. Common mistakes to avoid. If you're researching tax deductions for small business owners or agency owners, this is where people go wrong. Because certain education plans don't apply to spouses, transportation benefits don't give you a deduction, and the strategy doesn't work the same for S corporations. Structure matters more than people think. There are certain IRS rules that you must follow. To make this work, your spouse must be a real employee. What does that mean? They perform actual work, they track their time, they work under your direction, their compensation is reasonable, they're not a co-owner. If you can't prove this, the IRS disallows everything. If you want to reduce your owners legally as an agency owner, here's your checklist. Hire your spouse properly, shift compensation to fringe benefits, set up a Section 105 plan, keep documentation. This is not a loophole, it's smart tax planning. If you're a married business owner and have a single member LLC and you're missing this strategy, you're overpaying in taxes. If you want more strategies on how to legally reduce your taxes and maximize deductions, hit subscribe. And if you want help implementing a spouse employee tax strategy in your business, reach out.